Great, thank you, Peter. And thank you for your interest in GoGold today. And it's a pleasure being able to present to you. Now, I think one thing we should talk about just before we get going here is some forward-looking statements. And in general, what I would say is that the resource business is a very risky business. And knowing that it's a risky business, I mean, we're all investing it because we expect a superior return. But the way that you mitigate that risk is trying to deal with management groups who've done it before. So with GoGold, these are all the companies that I've built in my career along with my team. There's a few things you need. It's a very technical business. So I myself am a geologist. We built 4 mines over the last 27 years in Mexico. We have exceptional connections as far as raising capital in the markets because it's a very capital-intense business, obviously. Over my career, I've done over $1.5 billion of equity raises, and we've done several $100 million of debt raises with people such as Bank of Montreal, Scotiabank, and other private equities. Capital structure of GoGold. We have a very strong balance sheet. We'd be also about 20% insider ownership. Myself as CEO, I'm the 3rd largest shareholder of the company, along with about 50% institutional. And a lot of those names that I'm sure you'd recognize, like Franklin Templeton's, For Sale, Van Eck, are very solid and supportive shareholders of the company. Now, we do also have about $95 million US cash in the bank, no debt. We have another $20 million US receivable from the Mexican government. So available funds about $115 million US. Now, what's our business model in Mexico? Over the years, we've looked for kind of off-the-radar assets. We've capitalized on those. We've dealt with a lot of private families. And I'll just flip back to this screen for a second. The company's my very first, and that was a long time ago, about almost 30 years ago, started a company called Gammon Gold. And sometimes it's good not knowing what you don't know, because back then, if I'd known how hard it was, maybe I would have given up. But in Gammon, we acquired that asset for $15 million. We traded in both Toronto and New York. Before I left, we reached a $2.2 billion market cap. We had a mine producing 250,000 ounces a year of gold. And ultimately, it operated for, well, it's still operating. It was sold to Carlos Slim for $750 million. Then we have Mex Gold. That's the El Cubo mine. Bought that from a private family where we bought it for $20 million. We sold it 3 years later for $375 million. Nayarit Gold. That was a small deal, $40 million. We sold it to $80 million Capital Gold in 2010. But now here for the last 12 years, it's been GoGold. Now in GoGold, we operate, well, let me touch on one of our last deals. In GoGold, we bought Santa Gratuitas for $9 million. We spent $11 million. And at the end of 2017, we sold it to Agnico for $95 million US. Parral is our operating mine. Now, Parral produces cash for us. At Parral, we've been operating now for 10 years. We have another 5 years of reserves. And in the good times at Parral, you know, especially at $26 silver there a couple years ago, when we were involved in a very large drill program at our flagship project, which is Los Ricos, Parral was paying for everything, paying for drilling, paying for G&A, and the whole thing. Now, and then we have our flagship asset, Los Ricos, which we plan to make a production decision with a permit mid-year this year. But first, I'll just touch on Parral for a second. Now, Parral's a unique project. Like I mentioned, we've been here for 10 years operating, another 5 years to go, where we take old tailings from the middle of a city, 135,000 people. We apply some new technology to those tailings with agglomerated heap leach. And we take it from a situation where it's not very environmentally friendly in the middle of a city, and we bring it up to the 21st century environmental standard. And we make money doing that. Real good ESG, and really good for our shareholders, generating cash. Now in Pearl, the latest thing there, we've just added a zinc circuit. We started building that about 5 months ago. It was only $2 million capital expansion for the project. But now we produce zinc. We regenerate cyanide about 7 tons a day. And at $2,500 a ton of cyanide, that's a substantial amount of money. And we also are improving the value of our copper that we produce in a precipitate there as well. So we're ramping up there, but we're right on budget and right on schedule that by mid-year, it'll be up to about stabilized about $1 million a month of free cash flow that it'll add to the bank account. Now, also on the $95 million of cash in the bank, we're currently getting about 6% interest, if you can believe that, on T-bills and GICs. So that, along with per hour, will give us about $17 million a year of free cash flow. And what are we doing with all that cash? The next thing is to build our Los Ricos South project. So this is Los Ricos. This is the real flagship. This is the future of the company. Here we're about an hour and 45 minutes out of Guadalajara, the third largest city in Mexico. We have the Los Ricos district. Again, we acquired that from private individuals in March of 2019. Since we acquired it, we've drilled 250,000 meters. We went from 0 to 280 million silver equivalent ounces in resource. We've completed 2 economic studies, one in Los Ricos South and one in Los Ricos North, in giving a total NPV at a 5% discount after tax for the district of $870 million US. In Los Ricos South, we've now applied for permit, well, last April. That process, we've gone through pretty much all the steps right now. We have a final inspection, at which point we'll have finished all the technical part of that process to get a permit. We're very hopeful that by mid-year we'll have that permit for an underground mine in Los Ricos South. And and we'll be able to break ground. We're currently just finalizing a final feasibility study and a front-end engineering design, and we'll be ready to build. And what will that do for us? Well, if we look at kind of the highlights of the PEA, and we've gone from PEA direct to definitive feasibility study, over the life of 11-year mine, we'll recover 88 million ounces of silver equivalent at a cost of about $9 all-in sustaining per ounce. And that's at 148 million initial capex. So with our cash in the bank, we're going to raise about another 75 to 100 million of debt. And we've opened up a data room. We have 10 parties in there right now who are looking at our data. And we expect to have a term sheet before the summer on that. It's pretty much a competitive process. I mean, we're one of the companies out there that certainly all the private equity, and we have some of the Main Street banks looking at it as well, that we have the equity portion. We don't need any more equity. You won't see us out doing an equity offer. It's all going to be debt. So having that equity, those lenders are in a position where they can lend to GoGold. Starts off as a underground mine. And just as we go through the years of development here, it's all long hole stoping. It's not narrow. The average stope width is 11 meters wide. So long hole mining, lateral long hole, very productive and very low cost. So we progress through that 11-year mine life. It does have an open pit at the end of the process. And it generates about $80 million a year of free cash flow. Now, this in production, and I just give you kind of comparables. This in production will make the company essentially a Silvercrest or Aya Silver. We'll generate around the same cash. And right now we're trading at about 400 market cap Canadian with 95 million US in the bank. So having this in production, we should have a comparable market cap to those companies in around about 1.2 billion. But on top of that, we do have Los Ricos North, and we do have a PEA on that, which we completed earlier in 2023. So on top of all of that, we have another 413 million NPV in Los Ricos North. And our plan is it's going to be 3 or 4 years behind Los Ricos South. And in our financing package, we'll make sure we have the flexibility that as we're building Los Ricos South, that we're able to continue with engineering, and next will come Los Ricos North. And really, if you stitch those two studies together, you're looking at a district where we have organically a pipeline to produce about 17 million ounces of silver equivalent a year at under $10 all-in sustaining cost. And that wouldn't be as many reserves as a Hecla, but we'd be about the same production as Hecla at under $10 an ounce all-in sustaining. So I guess with that, I'll just say, why should you buy a GoGold? Well, we're really at the bottom of our kind of the Lassonde curve. We had the discovery phase where we drilled things as much as 55 meters at 2.7 kilos of silver equivalent. And the stock ran up to $3.85. In this cycle in the market, we're now about $1.20, 400 million market cap, lots of money in the bank. And with the build, just carrying out the business plan over the next 18 months, or 18 to 24 months, we'll be in a position where we should have a market cap of a Silvercrest or an Aya. So that's about 3 times. And with Los Ricos North coming into production, down the road, we're still 5 years, 6 years away from that. But with that, we should be more like a Hecla, kind of like a $2.5 billion market cap. So it's a tremendous opportunity with a relative low risk in our industry. I mean, experience, capital, high margin projects, and that is the reason why I do believe GoGold is a good investment. Thank you.